robots on factory floors, AI battling for dominance, crypto versus gold, and 3 space stocks you won't want to miss. Today we're asking who is actually leading the next technological revolution, and where should investors be putting their money? Welcome back to Navlayer Market Buzz. Today, we have a very special guest, Luke Langos, the senior analyst at Investor Place. Thank you so much, Luke, for joining us today.
Yeah, thanks for having me, Crystal and Louie. It's always great to sit down and talk shop with you guys.
Let's start with robotics. Boston Dynamics seems to have this epic battle with Tesla's Optimus. Who's actually ahead right now?
Yeah, I would say there's a near term and a long term here. In the near term, I would actually say that Boston Dynamic is winning. That the Atlas robot is very impressive. It's got incredible range of motion. It has incredible capabilities in terms of the amount of weight it can lift. I think over 120 pounds or something to that effect, considering its miniature size. And they're going into factories because Hyundai is a majority owner, obviously, in Boston Dynamics. Going into factories in Hyundai factories in Georgia, I believe, for electric vehicle production. So I would say right now, I mean, just based on the evidence, that the Atlas robot is probably the most sophisticated, most advanced humanoid robot in the United States today. But I think Tesla has some structural long-term advantages that will enable Optimus to be better by, 20. Elon has his own timelines, so I don't really want to throw out timelines for Elon. But in the next few years, I think Optimus will emerge as a leader because of a massive data advantage. Tesla has so much data when it comes to mobility, when it comes to operating cars in the real world, when it comes to how people interact with hardware. So I do think they have massive data advantage there. And then I think that they have an AI advantage with Grok that I think Elon's consolidating his whole empire, right? We saw XAI merge with X, and then now we've seen that merge with SpaceX. That's going to go public. And I think ultimately that entity merges with Tesla, and you have this one giant Elon co-conglomerate. So then Optimus will be able to pull resources from SpaceX, great engineers, pull XAI, Grok stuff in there, so it's just like there's a lot of resources that they can pull on to make Optimus really, really strong in the long term. So I would say BD's winning right now, but Tesla probably wins the long game here.
Excellent. So just so everybody understands, Boston Dynamics is private, but their big customer is Hyundai. And so the robots are initially going in the Hyundai factory in Georgia. Mm-hmm. And then the Optimus robots are supposed to go in the Tesla factories. Is that correct?
Yeah, that's the big spill that Elon's given, right? Phase 1 is roll out internally in our factories. Phase 2 is sell to other companies to use in their factories. And phase 3 is sell to people like you and me in our homes for $20,000 a pop. That's his big master rollout plan. It was supposed to be 2026 is the year of internal testing, 27 is the year of getting it to other companies, and 28 is the year that we get it to households. Elon's timelines tend to be a few years too aggressive, so maybe it's more like, extend that out to 2032 or something, but that is his master rollout.
Okay, well, it's going to be exciting to have the robot walk the dog. Since you talked about the merger with all the Tesla entities, this fuss that they're going to put AI in space, that's decades away, right? I mean, that seems like a physics problem to put all those data centers in space, even though it's cool up there.
Yeah, I would say Elon absolutely believes, and I think there are a lot of physics principles that would support him in this argument that is the future of AI compute, is putting data centers in space. I think there's also a political angle to this that I believe 7 states now, either 6 or 7 states, have proposed legislation to stop data center construction in their states. And it's bipartisan. New York has proposed it, and so is Florida. DeSantis is really against data centers. They're driving up electricity costs. They don't actually add labor, right? When TSMC builds a big factory, that does add labor. But when Microsoft throws up a data center, it doesn't really add labor. The construction, sure, but long-term, no. So there's like this bipartisan movement to kind of halt construction of data centers across the U.S. So I think that Elon's trying to skirt that. He's going to be like, hey, here's the solution, right? Stop building them on Earth. Let's go up to space. In terms of timeline for it, there is a data center in space powered by Nvidia that is helping power the Gemini model. So one does exist. Google also has a project which has been really hot. They're throwing data centers up in space. 2027 is when they're going to launch a constellation, so to speak. So that's their timeline. Elon thinks that if he's trying to raise up to 30 billion, I think, with this IPO in June, that he can take that money almost immediately and throw it into launching these data centers in space. He wants multiple up there by the end of the year. That's what he said. Again, Elon timelines are not reality timelines, but it feels like the next big wave of AI compute, AI infrastructure, and you're seeing the stocks attached to this movement respond as you would expect.
Well, I'm shocked you said that Kathy Hochul doesn't want data centers. You think, for upstate New York, which is pretty empty, and all that hydroelectric, and they got all the fast fiber optic in New York for Wall Street, you think they'd want to have some data centers. I mean, if New York doesn't want them, they'll just go to Canada, because again,
yeah, I think that is the wild card, which could accelerate the orbital compute thing. I mean, obviously, you and I are very plugged into the news cycle, and the news cycle this week has been very much AI is going to take our jobs, right? Like that's been the news cycle. Is AI disruption risk. We've seen software stocks get hammered. We saw bank stocks take a hit when the new finance AI stuff came out. We've seen commercial real estate stocks got hit really hard. CBRE, like its worst drop since COVID. JLL too. Transportation and logistics stocks, like, wait, what? How are these getting hit? So AI disruption fears are very much real. If that picks up speed, then going into the midterms, I think you could have like this a political platform could be anti-AI. Like if you elect me, I will stop this AI disruption and get us back to a normal level or normal playing field, if you will. I think that could be a big political platform. And then people are going to be like, well, we can't stop because China's building it. We got to be first. And so then Elon comes to the table like, hey, here's the solution, guys. Let's go to space. Right. And then you don't have to worry about it. So I think there's like a political accelerant, potential political accelerant.
I don't think that's the top political priority. Right. I know Bernie Sanders called for stopping the data centers because he didn't want the billionaires to get richer. But a lot of Americans have bet on billionaires, so that would not be good for their 401ks. So we'll see where it goes.
Let's shift to commodities. With all the volatility in crypto, should investors be relocating towards gold or even gold mining stocks?
I am very positive on the bull thesis for metals in general. So beyond gold, silver, platinum, palladium, copper, aluminum, although aluminum had a tariff headline today that wasn't so great. But I think the structural bull thesis for these metals is very strong. Gold, I think everyone knows the bull thesis there. Hedge against, dollar devaluation, hedge against inflation, hedge against a lot of different things, uncertainty. That's fine. I actually like the rest of the metals complex better because there's an AI demand vector that is emerging. That when you throw up a data center, you need silver. It's the best conductor in the world. And, we've used copper cables for a very long time. And suddenly, all of these companies, they want a competitive advantage. So what's a competitive advantage? We'll upgrade the copper to silver. So once one hyperscaler does that, then all the hyperscalers do it. So I think you're getting a massive upgrade cycle in these cables to silver. And so I think there's a massive new demand vector for silver. There's a lot of platinum and a lot of palladium in these data centers as well. Of course, there's still going to be a lot of copper in these data centers. And so I think you're getting a demand super cycle for metals that thanks to the AI data center build out. At the same time that people are looking to invest in hard assets as a store of value. People are a little bit concerned about the dollar. People are a little bit concerned about overvaluation in stocks. People are really concerned about cryptos. And so I think money is flowing out of some of these things into these hard assets that are simultaneously historically great stores of value and benefiting from a demand super cycle at the same time. Like, why wouldn't you want to own that? Right, that makes a lot of sense. It's very logical. So that I am very positive on that bull thesis.
But now with silver, with that recent 30% drop, was that really fundamentals or was that driven by leveraged ETFs and option speculation?
Yeah, I think it was a lot of leverage got built up in there. I mean, I think what you saw happen is that crypto money moved into silver, right? That crypto money, Bitcoin has not done what it's supposed to do. I'm a long-term Bitcoin believer. I'm a long-term Bitcoin bull. I've liked it for 6, 7, 8 years, but I've been very disappointed with what it's done in this cycle, that it hasn't acted like a risk-on asset. In 2025, when tech stocks, the whole NASDAQ rallied more than 20%, Bitcoin fell 6%. So it didn't act like a risk-on asset. That's really disappointing. And then it didn't act like a safe haven, right? It was supposed to be digital gold, but gold has picked up all this steam and momentum over the last 6 months, and Bitcoin has crashed 60%. So it's like, you're not risk on, you're not safe haven, you're kind of stuck in no man's land. And so I think a lot of long-term believers have kind of not thrown in the towel, but temporarily kind of suppressed their enthusiasm, their optimism, and their reallocating dollars. So I think you saw a lot of dollars reallocate from crypto into silver. And when crypto money goes into silver, it seeks leverage because silver typically doesn't give you the returns that cryptos do. So it seeks leverage, it seeks options, it seeks way to really put some torque on that. And then I think, and obviously we all knew it was going to blow up at some point. And so it blew up and you got the 30% drop. We found some good stability in the last week or so after that 30% decline. We haven't made new lows. We're kind of just consolidating around that level. And I think it's basing for the next move higher. That's my opinion.
Okay. So let's go to the big news. Obviously, Nvidia is going to be announcing soon. And it looks like a lot of their customers are reporting just record results. Supermicro sales were up 123%, guided higher. They had a huge order backlog. Vertiv Holdings had blowout results. Taiwan Semi announced that their sales in January were up 37%. That was above their guidance of 30% for the year. So this all seems to be setting Nvidia up for a massive surprise. What do you see?
Oh, I agree. The market is simultaneously pricing in two things right now that can't coexist. One, AI is going to disrupt all these industries massively, and two, we're overspending on AI. Those two fears cannot be true at the same time. And so if you're going to pick one that's overstated, that's overdone, the one I would pick is we're overspending on AI. That I think these AI disruption risks are pretty real. I do see massive improvements in the AI models. Claude Opus 4.6 is fantastic. And then yesterday, Gemini launched DeepThink, which is actually blowing Opus 4.6 out of the water in terms of reasoning and all the benchmarks out there. So these models are getting super, super good. CDance 2.0, Crystal, I know you're into film stuff. That AI video generator is like sensational. You're seeing videos of like Tom Cruise and Brad Pitt having a fist fight on a building in Los Angeles talking about Jeffrey Epstein. Like it's the craziest stuff off a 2-line prompt, and it's hyper realistic. So these models are fantastic. I think AI disruption risks are not overstated. I think the AI overspending risks are overstated. To your point, every single company in the AI supply chain, in that AI spending blast radius, Applied Materials, Arista Networks, Veritiv, they're reporting fantastic numbers. So how does Nvidia not report fantastic numbers? So I think they're going to report fantastic numbers and hopefully put to rest these fears that the AI spending train is slowing down or it's too much too soon. I think that Nvidia can, Jensen Huang is a genius at calming investors on that conference call. And I think he will do a great job this time of calming fears about overspending and saying, hey, this is actually just getting started.
Yeah, not only is he a great founder and, is calming investors, he's also a great politician. He gets to work with China, gets to work with Trump, he gets to bridge all the gaps. Even though Nvidia is our largest holding, we're grossly overweighted in it. It's just interesting how a company with $5 trillion market cap can still have their earnings and sales accelerate. It's really an interesting physics thing. And because Nvidia is worth more than the entire British stock market or worth more than the French, German, Italian stock markets combined, it's just going to be interesting to watch, how the results can impact that stock. It's certainly going to shore it up. I've got it under 20 times forecasted earnings. I look out a couple of years. So it's going to be a wonderful grand finale to this earnings announcement season.
Yeah, I think when you talk about Nvidia and all the AI supply chain stocks, they are dramatically undervalued on a P multiple basis because investors seem to be fearful of the cyclicity of the semiconductor spending. Right? They're fearful that, we've reached peak CapEx for AI. And so earnings are going to decelerate or fall next year, or this is as good as it gets. And so they're priced like the memory stocks are a great example of this. Micron, Western Digital, Seagate, they all trade at pretty low P multiples. And it's because memory is historically very cyclical and they're concerned that we've reached the peak of this cycle. My argument there is, so this year, the hyperscale 5 are going to spend $710 billion on CapEx. That's basically $2 billion a day. I think that is the new floor. I don't think that is a ceiling. I think that is the floor for the next 5 to 10 years. I think these guys are going to spend $700 billion or more per year for the next several years. And so I think these low P multiples in the supply chain, including Nvidia, are nonsensical. And I think you're going to get a re-rate higher on multiple plus the earnings growth, and you get that 1-2 punch, and you get a lot of alpha out of those names. So that's how I look at it. That's why I think the recent kind of choppiness in a lot of these supply chain stocks is a tremendous opportunity, Nvidia included.
So, in your view, who is actually leading the AI software race right now?
So everybody wants to know who's going to win, right? Like that's the big question. My response always is we're in the third mile of a marathon. So I think it's very foolish to call a winner. So it looked like OpenAI was going to run away with it, right? And then Google punched back with Gemini, and Gemini was amazing. And then Anthropic punched back with Claude, and it looked like that was going to be the best model. And then now Gemini's back with DeepThink, and ChatGPT's got Codex and Frontier and all this stuff. So they're all launching these new models that are getting exponentially better, and the lead keeps, changing. When you look at like the betting markets, who's going to have the best AI model by the end of February is one of the big bets out there. And it's just oscillating like crazy because it's too early to call a long-term winner here. And I think that's fabulous for the supply chain stocks. Because what does that mean? It means you have a bunch of competitors who all think they can win. And if you think you can win a race, then you're going to spend like you're going to win the race. And so that's why I think that $700 billion is the new floor. That if it looked like Google was just going to run away with it, then OpenAI's investors would stop giving them money and they would say, you know what, sorry, let's close up shop. Or, Anthropic would be like, you know what, we can't spend anymore. We're not seeing the returns. And so then all of a sudden the spending does slow. But because they're all so competitive and leapfrogging one another, they're all going to keep spending like crazy. And the supply chain stocks are all going to keep benefiting. Who's ahead right now? I would say at this very moment, as of this recording, probably Gemini has a slight lead, but Anthropic's not too far behind, and ChatGPT is not too far behind that. And then probably next month, if we had the same recording and the same question, I would have a different answer. And the month after that, it'd be a different answer. And that's the game we're in right now, third mile of a marathon.
So we're in a perpetual motion machine.
There you go.
All right. Let's talk about the job situation. Obviously, the January payroll was better than expected. I think lost 42,000 government jobs, but created 172,000 private jobs, although that disagrees with ADP. But it seems like there might be hope on the job front. Now, Stanford wrote this report, the Hoover Institute wrote the report, why the computer science majors at Stanford couldn't get jobs. And this was a few months ago. And obviously, that's half of their graduates. So it was kind of a big deal. You went to Caltech. A lot of smart people. I assume they're all employed, right? Anybody can get a job, gets a job, right? But they just might not all be able to work for JPL or their first choice.
Yeah, I would say that in my circle, everyone's employed, but nobody wants to leave. That people are afraid that if they do leave, because in 2021, 22, even going into 23, there was a lot of jumping. Everybody in my circle was jumping. People were at Tesla and they left Tesla to go to SpaceX. They were at SpaceX and left SpaceX to go to Rocket Lab. Or they were like, there was a lot of jumping because people felt very comfortable that if I leave this job, my skill set is so valuable that I can find employment anywhere else. That comfort is like completely gone now. So everybody's still employed, but even if they hate their job, they're not even considering leaving because they are fearful that they've heard horror stories of other friends who did leave or quit or got laid off, and they're just, twiddling their thumbs. Like there is no employment for them right now. So I would say that in my circle, that's what has happened. Everyone is employed, everyone has jobs, but nobody wants to leave. And I think you're seeing that in the jobs data, right? The quits rate has been steadily declining. And I think that's a microcosm. That's especially true in the tech sector, computer science sector, engineering sector, where you're seeing this AI disruption risk be most prevalent.
Let's talk space. What are your favorite space stocks right now and why? And beyond space, what other sectors or specific stocks are you most excited about?
Yeah, I would say, I got my big three of space: Planet Labs, PL, Rocket Lab, RKLB, and AST Space Mobile, ASTS. That's my big three. I think they're all going to benefit tremendously from what I expect to be an accelerated orbital compute ramp over the next 12 to 36 months, because Planet Lab is already working with Google to do orbital compute. Because what's going to happen here is Elon's going to do it. And if he does it well, it's going to create FOMO amongst everybody else, because they own SpaceX, and SpaceX is one of only 2 or 3 companies that can repeatedly get into space. So if Microsoft sees that, they're going to be very desperate to find their own rockets to get to space. And if Alphabet sees that, they're going to be very desperate to get their own rockets to go to space. And they're not going to go to SpaceX because they don't want to rely on their competitor to launch them into space. So they're going to go to the Planet Labs of the world. They're going to go to the Rocket Labs of the world. And so I think these companies benefit tremendously from a FOMO catch-up trade or catch-up spending wave by everyone not named Elon, everyone not in the Elon universe in the AI world. And so I think those stocks are going to benefit tremendously. Then AST Space Mobile, they do networking. And I think, again, that's going to be a catch-up trade that as Elon consolidates his empire, obviously his orbital communication part of that is a huge piece of that. And so they're going to need, they meaning Microsoft, Alphabet, Amazon, the others, are going to need some orbital communication as well. And that's AST Space Mobile. That's the only other one out there that's viable besides what's in Elon's universe. And so I think these three stocks are going to benefit from a FOMO trade from the rest of the AI world as Elon does successfully pioneer orbital compute.
So, Luke, are all the satellites pretty much solar powered? Because I know a long time ago when NASA launched Voyager, they had nuclear batteries because they last longer. So is it mostly solar powered because they're just running around the Earth?
I would say most of them are solar powered, but they're different solar panels. They're not like, you can't just take like a solar panel that Enphase makes here on Earth and, throw it up there in space. That physically does not work. So they have to be very special, custom solar panels. And actually Rocket Lab has a whole division dedicated to making those custom solar panels. That's another reason I think they can benefit tremendously here.
And I assume that space debris could hurt them. I guess it depends on what orbit they're in, right? I mean,
yeah, so I think all of these are going to go up into LEO, low Earth orbit. I think debris is a problem. Radiation is a problem. You're going to need a rad harden, they call it, radiation harden a lot of this equipment because if you get a radiation blast and the data center just fries, well, that's no good. So you gotta rad harden everything. The GPU's got to get rad hardened. The networking has to get rad hardened. All that stuff has to get rad hardened. That's more of an internal job. There's not really like a company that sells rad hardening solutions. So unfortunately, there's not really a way to play that, but that is something that has to happen. It's an additional cost factor.
No, that's fascinating. So final question, Luke, quantum computing. Obviously, I've written reports on it. I think you've done promotions on it. It's my perception, and just correct me if I'm wrong, that we got Vera Rubin from Nvidia. There's going to be a big upgrade cycle. Then we got one more special chip after Vera Rubin. And after that, NVIDIA can't make the chips faster because they're approaching the atomic level in the circuit board. And that's why they have they had a quantum day, and everybody's trying to figure out how to program the quantum computers. So when will this explode? Will it explode in 2030, 2032, and then we know they got good sales. Then when will the earnings eventually show up? So I guess that's my question.
Yeah, I mean, I would say your timeline's pretty spot on there. We get an upgrade cycle from NVIDIA once a year, pretty much. So we'll get another one in 27, and then 28 is probably when rubber meets the road. And so that's when we have to have some quantum stuff in there. I don't know if it's a pure quantum chip or if it's partial quantum, but we're going to have to have some quantum in there. So I think 28 could be seen as a year, like a real inflection point for a lot of these quantum players. And I think the inflection point is going to be that NVIDIA makes some splashy acquisition. That I don't think it's going to be like IonQ suddenly is growing at 1,000% year over year. I think it's going to be IonQ gets bought out at 1,000% premium and then grows inside of NVIDIA at a 1,000% year over year or whatever it may be. So I think that's kind of what happens. And then maybe if NVIDIA does that, Alphabet does the same thing because they have their TPU program, their tensor processing unit program to compete with NVIDIA's GPUs. So maybe you get multiple splashy acquisitions in this space. And I think that can come in 2028. But this is the next big thing. Market's just cooled on it because I think, macroeconomic stuff and AI disruption fears and everything is kind of taking front and center. And so investors sell the risky stuff first. And this is obviously out on the risk spectrum because it's long duration in nature. Nothing about the underlying fundamental growth thesis for quantum has changed in the last 3 to 4 months, just the price action on these stocks due to other factors. So if you're willing to look past that and be a long-term player here, I think this is a good opportunity for a lot of these stocks. And I think you have to be a little discerning. Not all of them will succeed. You have to look at who's got the technical supremacy, if you will. And in my view, based on the people I've talked to and the research I've done, IonQ is like head and shoulders above a lot of the others in the space right now. And yeah, so that's where we are. We're very bullish on IonQ. and less bullish on the others in the space, just from a technical perspective.
Well, let's summarize it for people. So IONQ invented qubits, which is how you package the data for the quantum computing. D-Wave won the Nvidia programming contest, and then Rigetti's an encryption expert. But what am I missing? Is that kind of the track everybody's going on right now?
Yeah, I would say Rigetti spot on encryption. D-Wave, longest running player in the game, a lot of experienced talent there. They've been doing this the longest. And then IonQ's real trick, if you will, or special sauce is their trapped ion computing stuff, which allows us, don't want to get too technical. It's a specific way to do quantum computing that allows them to miniaturize it. And they do that better than everybody else. They can get these quantum computers as opposed to those big kind of gold spiral things that you see sometimes in your Google quantum computers. They miniaturize it into chips. And so that's why we like them the best. We think that is a major technical breakthrough. That miniaturization is a major technical breakthrough that they are way ahead of everybody else on, and is going to pay huge commercial dividends in the long run.
And I have one final AI question, because I thought you might give us some insight into that. Are we ever going to have AI for dummies? We used to have those books, finance for dummies and things. Because the machine learning looks at so much data, I would just think that we could look at some correlated things and not look at everything. And we could have cheaper, more efficient AI, kind of like our Alexa in our home. I mean, it doesn't need to look into our credit card and figure out who we are based on our spending patterns. And, we'll be getting all these home AI devices, consumer appliance type devices. So to me, it's like some AI is going to be like our pets or our kids conditioning us. You know what I mean? We might think we're training them, but they're really training us. So is there going to be this, I don't know, dumb AI is the right description, or less correlated AI or more targeted AI, I guess is what I'm trying to say.
So in the industry, we call it LLMs versus SLMs. So LLMs are large language models. That's what we all know, ChatGPT and Grok and Gemini and Claude. And then there's SLMs, which are small language models. So to your point, that's AI for dummies. Like, okay, I want AI on my fridge. I don't need it to know the answer to the universe. I just need it to know about the fridge, right? And the foods inside of it. So that would be a small language model. And so there are, the companies are working on SLMs, and that's mostly through their inference pivot. So as opposed to doing the training, they're doing the inferencing, they're doing cloud, or they're doing edge compute. And that's where I think the next big bottleneck could be in artificial intelligence, actually. That if you kind of look at what have been the biggest winners in the AI train over the last 3 years, there have been bottlenecks that have emerged, and the companies in those bottlenecks are the ones that just kind of pop off like crazy. Like we had the bottleneck first in GPUs, then we had the bottlenecks next in servers and SMCI and Dell, and those stocks went crazy. Then you had a bottleneck in networking, Lumentum, Coherent, Credo. Then you had a bottleneck in cooling equipment. You had a bottleneck in power. You had a bottleneck in memory. So they've been kind of just one bottleneck after the other, and that's kind of sparked these massive rallies in these stocks over a short amount of time. I think the next bottleneck could be, to your point, this shift to SLMs, AI for dummies, to inference, and that's going to create a bottleneck in edge chips. So these are smaller chips, more efficient chips. They're not like the GPU Ferraris. They're just like little edge Fords, if you will, or edge Toyotas, right? And Ambarella is really good at that. Qualcomm, surprisingly, is really good at that. NXPI is really good at that. And so these are stocks that have kind of been, Qualcomm specifically, a sleeping titan in this space. All these other chip stocks have gone crazy, but Qualcomm is not at all. It's been stuck in the mud. But I think it could wake up in a big way if Edge AI does become the next bottleneck. That's a stock that could follow, kind of like a Micron or not an SMCI, that's too small, a Micron or a Dell sort of kind of hockey stick growth over a matter of 12 months. So I think that's a space that could wake up. I do think that's a big pivot that's coming, as a pivot to SLMs. And these mini models that don't need to know the answers to the universe, just need to know whatever the heck they're being asked to do at that moment in time.
Wonderful, wonderful. Well, thank you, Luke. You gave us some insight that we just don't hear every day. So we really appreciate it and paint a picture of where we're headed.
Yeah, thanks guys for having me. Always a pleasure.
Thank you all so much for watching. We really hope you enjoyed this video and really appreciated all of Luke's insights. Please make sure to give this video a like and subscribe if you haven't already, but we will see you all this Wednesday for a new midweek update. Thanks so much, everyone.